Hello, Biz World. Welcome to another episode of Hold, Buy, or Sell. And in this episode, we will be focusing on Old Mutual shares and recommend at the end of the episode whether you should buy, hold, or sell. So let's go quickly through the background of Old Mutual. So, Old Mutual is an insurance company focusing on essentially investment, savings, and in recent times, banking. It is listed on the JSE and it was founded in 1845 in Cape Town. And the key people there in the company is Trevor Manuel, who was at some point the finance minister of South Africa, and now is the chairman, and Ian Williamson, who is resigning this year, who's taking early retirement. Yeah, that's in the news here. You can see he's gonna be taking an early retirement and stepping down as CEO. And you also have the new bank, Old Mutual Bank, that will be launching um, in the second half of this year. So essentially, it has more than 30,000 employees as of 2018. And if we look at the share price, how it's been doing, over 5 days, it is down more than 15%. In 1 month, more than 16%. 6 months, it's more than 22%. And year to date, it is down more than 17%. So now the question would be, why? What is driving the share price to go down? It could be the anticipated losses that will come with launching a new bank. It could be also the uncertainties around the Old Mutual CEO stepping down. And so, with a new CEO, with a new bank also underway, you kind of ask yourself what will be of the company, whether as a shareholder, your value will be protected or not. And we have seen over the years, like, at first in the 70s, Old Mutual was growing bigger and acquiring companies. And then now in recent times, in the 2000s and 2010s, we saw the company becoming leaner, selling, uh, you know, like the question is, if you sold Netbank and now you want to start a bank, what does it say about the the vision of the company, and if the company is run well and if it's taking the right direction? So if you offloaded a bank before and now you want to go back, well, what does it say? And it's quite a valid concern for shareholders to look at that. And they also spun out their asset manager in asset old wealth manager, or asset manager, their UK asset manager, or Kilter. So essentially, now what you have remaining of Old Mutual, you have Old Mutual South Africa and Old Mutual in other countries, particularly African countries. And you just have some presence in China there as well. So, what would a value investor what would a value investor do in this event where you have a share price that at the current moment is trading at levels we saw around COVID? So at the onset of COVID, you had the share price down as much as to levels of 10 rand 34 cents, and then also now you have it trading at 10 rand 25 cent, which is less than where it was during COVID. And we know that COVID, a lot of companies were experiencing financial difficulties. A lot of companies closed down. A lot of companies had losses. And you're looking at a company with a market cap of 48 billion, which is less than its book value of about 58 billion. And so as a value investor, you can kind of start to see some some potential to make some money out of this share price. Obviously, with this risks of the risk of a new business of a new bank that will require about 2.8 billion to be used, and then you also have the CEO stepping down at some point. So there is a risk, and we do know the higher the risk, the higher the return. Investment does involve some a form of risk. So let's just go to valuation. So current price is the current price is 10 rand 25, and we have the target price at we have the target price, essentially the price that you believe as a value investor that this share is worth. And through our modeling, we believe that the share price as a value investor that you should be aiming for in this is 13 rand 75 cents, and the estimated profit or loss from this would be it will be this. It'll be just a profit of more than 34%. So this can be, it does not mean it will be, it is a target. It's the target. It can happen, it might not happen. But as a value investor, you are saying that you are willing to buy and hold this stock until it reaches its full potential. And if you do that, you have a potential gain of about 34%. And for this share price, we have an entry price, which is where you should, if this share price goes under this level of 11 rand 66, then you should definitely buy. And now it's currently trading 10 rand 25. And the exit price, that is when you should sell, is when it goes above 15 rand 78 cents. So having said that, here at Bees and Dough, we are saying this is a buy. So you should shortlist it for a buy. And having said that, it is with risks. The company is going through changes, and it is going through an investment into a new venture, which could go either way. It could go right, and it could go wrong at the same time. So as a value investor, you can shortlist it, and it is not an outright buy because of those potential potential risks, but it is trading at very good levels, and I believe if things turn out well with the bank, though in this year and the next coming year, it could make losses. It will make losses at the bank, and hopefully, as they had estimated or predicted, it could make break even in 2028. But in the meantime, it's a wait and see. We have seen Discovery, they launched their bank. It is, the bank is essentially turning around there. So if they do follow that example, it could work, and you as a value investor could see some potential upside from this. And having said that, it's a good buy. It's a good buy, Bees World. We will catch you up next time.